Welcome to our first quarter recap for our retail portfolio. Myself and Andrew Ziffer today, we are excited to just go through how things have been performing and what we're seeing in the market as a whole. The market right now has been indecision.
Yes.
This is kind of what we'll go with, I guess.
It's not something you could actually predict right now. So the question is, how do you do business in a little bit of an uncertain market, and people who don't people are indecisive about making choices, and so sometimes that brings some problems in the industry. But then, how do you actually capitalize on
what is the opportunity?
Yeah, what's the opportunity when there's indecision and also lack of commitment of people wanting to invest in the market too?
Yeah, these really the end of 2024 saw some of the lowest transaction volume we had seen in about 10 years. That's continued into 2025. So first quarter of 2025 was literally the data we can find and the charts that we have show that this is the lowest transaction volume since 2015. So literally a 10-year period.
Yeah, why don't you think about that? So like 10 years. 10 years was before COVID. Like there was some good years in there. And all of a sudden, the least amount of transactions sold in the first quarter of this year. Now, just the side effect of that, what happens to brokers and people who are employed in the industry?
Well, we've seen that across the board where fees and transaction costs are increasing because they want to make up some of that.
And the number of people doing it is decreasing because if there's not transaction volume to support the people, there's going to be a whole transformation of businesses where people are leaving, and then in a few years, new people are coming in. And so, like, this is the time when you're focused on the people who are the long-term people, the survivors, the people who have seen a down cycle. Some brokers have never seen a down cycle.
I know it's only been up and away, but we look at really the peak or the bottoming out of cap rates when we go through this, looking at our retail deals. It's really like 22 into 23 was when we saw cap rates transacting at the lowest levels. And then we got really excited in 24 when we were seeing cap rates go higher. We see that right now in 2025. Some of the Dollar General stuff we're looking at, the other retail outlets we've been looking at, we focus on our brands like our Zaxby's or DQ.
Well, the Zaxby's and the DQ and those major brands are still selling at like kind of low cap rates. Like we can't buy this, but Dollar Generals of all things, this is one of the most stable, it's a credit brand, and they're selling, some of them, not all of them, are selling at really high cap rates right now. And this has been, not only for 10 years, but I'd say it's actually more than 10 years, probably 15 years, but these are the highest cap rates Dollar General have seen in
but I mean, that's across the board. We saw higher cap rates going into the end of 24 and into 2025 than we've seen in retail, kind of just across the board. You look at the average numbers, mid sixes is about the highest we've seen in about a 10-year period.
And remember, we also talked about there's going to be a time when these cap rates are going to go back down. And we're trying to pick the time when these cap rates are at the peak or close to the peak. And that's when you buy. And, our hope, well, not our hope, but I mean, it's actually, we're kind of showing it right here because right now, if you look at the cap rate graph, cap rates are going down just a little bit right now.
That's also why transaction volume is down, though. No one's super excited about selling at a higher cap rate. So we're seeing really tight market, really tight cap rate. So it's hard to get out there and go find stuff.
So it's really opportunistic selling, opportunistic buying of, hey, I need to sell this because of this, or I need to buy this because of this. And I think that's what's happening right now.
So one thing we like about retail deals as a whole is they do have this stable component. You've got bigger organizations that are, for the most part, paying their rent on time, and you have built-in escalations that are going through. So we just recently had some that are coming that came up, and then we have future ones that are near term to our next escalation. So one of our Dollar Generals, we just got our 10% rent bump.
Yep. Well, Dollar General in Sevierville, we just got our lease extension for that one. So we got a 5-year lease extension, and with that 5-year lease extension to September 2030, we got a 10% rent bump. So it's a nice little bump.
Yeah.
And this is also it's a great performing Dollar General in the by Dollywood. What could be better than being next to Dollywood?
It is great. My daughter just went there for spring break. She loved it.
And the Titanic Museum too.
So I mean, that's one of the benefits of the retail deals is kind of set bumps that they have in it. This is a deal where when we get that bump, we always then go through the underwriting process of it. Does it make sense to hold this thing longer term, or should we sell this, or what does it look like in the current market? We've got this thing at a great cash flow, so we're holding this, and it's performing well. We look at other ones that are coming up. Some of our other brands like Family Dollars and Panera's, we have lease extensions that are coming up. And these aren't just like, hey, it just happens and that's it. We're working up to these months in advance to prepare for it. So those ones are kind of our next conversations are coming up in the next 12 months to look at those
and like, for example,
extensions.
The Family Dollar, the lease expires in January 2026, and so that's on our radar right now. But that's
because we're under 9 months.
Yeah, yeah, and
under 9 months, time to work on it.
Panera, which is one of my favorite assets because I'm in it, is actually I'm in it for a lot. But March 31st of 2026, the Panera is up too. So that's I mean, I always loved the brand Panera, and they're
it's been a good performing deal for us.
Yeah, it's really good performing, and that was our number.
It's one of the first ones we did.
That was one of the first ones we did. We bought the strip mall. We had the home run of selling the strip mall and keeping the Panera. And our basis in that Panera was very, very small because of that. So
one of the other parts too we want to go through is just our debt. So all real estate transactions, debt is a vital portion of how these things play out. We've always been the proponent of getting longer term debt. Most of our retail deals, when we get debt, it is tied to the length of that lease. So if we have a lease renewal normally coming up, that normally means we also have a debt renewal coming up. And really the first one we have is our Family Dollar that comes up in January, which, I mean, we got to get started on that stuff now. We don't want to wait. We're not waiting until the end of the term there, but that one's at 3.5%. And we look at our current debt markets right now, we're in that high 5s to 6% range. Right. That's where things are falling right now. When we're buying deals, we're looking to have this 200-point swing in spread. Where we want to, if we get a 5.5% debt rate, we want to see we can buy something for 7.5%. That's how we get into the double digit, kind of like mid-teens IRR target is when we have those numbers. But we're not eagerly going to go out and refinance cheap rate debt ahead of time. We're gonna wait until the end of the term to do it. From an operations standpoint, we look at how are things going on all of our retail deals, and we have two types of leases. We have triple net leases and we have double net leases. On the double net side, occasionally there are things we're responsible for. Roofs, parking lot, like kind of sealing and striping. That's a big thing we're looking at all the time. Maybe it's pressure washing the exterior. There's little things that we have to do. And in this quarter, we didn't have anything that we did. So it was a pretty smooth operating quarter.
Right. So this quarter, every single deal is pretty much paying except for two. So we're paying on our Fund 1, and we're also on profit distributions on Fund 1. Panera's paying, Zaxby's, Kennesaw, Zaxby's Powder Springs, which is part of Fund 1, Taco John's, Family Dollar, Applebee's Lithia Springs, and Applebee's Killeen, the Vortex at both locations, and DG Hepzibah. They're all performing. They're paying out distributions. And we just paid our first distribution, or we will pay our first distribution for DG Bundle 1. So DG Bundle 1 was Dollar General Piedmont in Missouri, Dollar General Brantley in Alabama, and Dollar General Sylvania, Alabama. And those are going to be the first distributions for our Dollar General Bundle 1.
And we just picked all those deals up.
Right. We just
they were
closed
great.
On Sylvania last week, too.
Higher cap Dollar Generals we were able to acquire, and we're making our first distributions since owning those things coming out this quarter.
And those were all 8-cap Dollar Generals, which are unheard of. And then we have two, Applebee's Sumter. We're currently in the process over the next couple of years. We have to re-tenant that one, so we're holding distributions on that one. And Dollar General Sevierville, we had we're waiting on the tax reimbursement. We're lucky enough to give Dollar General a free 90-day loan.
So that's part of the lease agreement on some of these. There's always little nuances, but in that specific deal, we pay the property taxes, and then they pay us back. It takes about a quarter for the cash flow to play through on that. So we're doing that right now.
I call it a free 90-day loan for Dollar General.
Pretty much. Free 90-day loan.
Yeah. And we have some asphalt that we did repair at DG Sevierville. But other than that, I mean, good quarter for retail. So it was we did well.
So it's pretty strong, pretty stable. When we're looking at all of our retail deals, we're really aiming for stability. So when we go through all of these deals that are making our distributions, which come out on the 20th at the end of the quarter, it's always on the 20th at the end of the quarter. So all those will be going out. That's really what we're looking for in retail deals, is how do we add this stability with a little bit of rent bumps over the years to add to the returns. So coming up, we've got a couple more deals we're looking at. We are trying to go find, even though it's slim volume, what else is out there? What can we get in the 8-cap range? So we were driving around this past week looking for more deals. We're out there, we're looking for them, but as many of these 8-cap plus retail deals we can find, that's what we're looking really to close going forward.
Right, and also we have opportunistic buying and selling, and so one of the off-market opportunities we had. We sold our Applebee Seneca property, and that was an off-market broker just came to us and said, "Hey, will you buy it or will you sell it?" We said yes, and so we sold that property, and we're going to actually trade that in. We got a new deal coming called one of our favorite Dollar Generals we've seen, which is I think a unicorn. We visited it last week, Dollar General Market in Eaton, Georgia. Eaton, Georgia.
Yeah.
We figured out how to pronounce it correctly yet. We have not, but that's coming up, and it's actually a grocery store. It's essentially I call it a mini Walmart or one of those small footprint Walmarts. It's a real grocery store, and it's the grocer for this small town in Georgia, and City Hall. You know, talk about real estate being in the right place. This is literally down the street from their City Hall. So
I mean, it's right down. It's right in the little town,
and also a carpet central too in the whole Dalton, Georgia area too. So it's a pretty nice little setup there.
Yeah. So distribution's going out to 20th. Overall, very stable, consistent quarter on the retail side. We're going to keep looking for opportunities if they hit this target and we get them over an 8% cap rate. And then overall, you know, two takeaways: just volume and transaction size is lower right now. It's across the board in the market is what we're seeing. So taking a little bit of extra effort to get out there and go find these things and convince people that now is the time to let go of their asset and sell it.
Well, yeah, because I mean, it's not intuitive. Usually when things are not great, you don't want to buy or don't want to invest, but actually those are probably the best times to invest because it's I mean, you buy when no one's selling and you sell when no one's buying. Or no, is that wrong? I got the opposite.
I think we're going to go the opposite.
Yeah, the opposite direction. Yeah. Buy when no one's
no, you're trying.
Buy one.
We'll skip that part.
Yeah,
but we are going to have a live Q&A that's coming out at the end of this as well. So we can go through property-specific questions. We'll have a link to sign up for that. If you're interested, please let us know. If you have any other questions, thanks for watching our first quarter recap of our retail portfolio.